Hello everyone and welcome to this session with David and myself. You'll have to forgive us. We are really rusty. As those of you who come along regularly will know, we've had a few weeks off for some much needed rest, quite frankly. But we're back now. We're back to a full complement of at least 2 webinars a week. We have one later on as well, but having been away from the tools for so long, I mean the technical tools, and I don't mean the trading technical tools, I mean the physical tools of the webinar, we got ourselves into a bit of a pickle. Anyway, it's great that you've taken the time out to come and spend it with us for this session, and we'd better crack on. But before we do, can I just draw your attention to the disclaimer that I'm pretty certain you can see on your screen, because David can see it over on his. And as you know, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. I say that every time, but it has to be said, and it also is important. Because I don't think it's a kind of legal requirement, but certainly it's good practice. So please do bear that in mind. As always, we will be looking at the charts and the markets, the forex markets, through the prism of volume price analysis, and we'll also be looking at the fundamentals and the related markets and putting it all together to tell us what is happening, but more important, what is likely to be happening next. If this is your first time with us, the approach that we have, this 3D approach, if you like, is all contained in the books that you can find on Amazon, and we've bundled them together into what we call this digital library. That you can buy them individually, but there's really good value for the digital box set, which I think is something like $9.99. You have the technical, you have an explanation of the fundamental and the all-important related markets, to give us a clue as to, in terms of market sentiment and what is actually driving the market at any particular time. Volume price analysis. I'm going to, I know you've seen, some of you who've come before will have seen this schematic, and it's really the kind of best way that we can describe volume price analysis, but I'm going to put it together in a slightly different way today and I'll explain when we look at the charts. But there are 5 elements that make up the methodology, the technical analysis approach, if you like, of which is VPA. We've obviously got volume, we've got price action, we use candles and candle patterns, and support and resistance. And what you have to do, what we have to do, what traders have to do, is we have to sort of what's called synthesis. We have to put together the elements to kind of connect the elements in such a way that we get a complete picture. And once we've got that complete picture, we can then decide whether to take a trade or not. Now, there are 5 elements, and you think, oh my goodness, how on earth am I going to put those 5 elements together all in one go? Well, you don't, because, when you first start, it's like when you learn anything from scratch, you have to take it a little bit at a time. So you take one of those elements, so you take the price action, you look at the price action and you understand what the price action, what is a price cycle, what is a trend, how do we determine whether we're in a trend. And once you get comfortable with that, you then look at the volume, because the volume actually confirms if the price action is genuine or not. I mean, that is at the core of it, of VPA. As I said, we use candles and candle patterns, hugely important, because whether we like it or not, some people, a lot of people think of technical analysis and candles, candlesticks as kind of a bit of voodoo. They think, oh, well, it's a self-fulfilling prophecy. Everybody's looking at that head and shoulders pattern, so of course it's going to fall. Maybe there's an element of that. Maybe it's true. Whether it is or not, the important thing is, does the price actually fall? Does it fall more times than it actually goes up? And if the answer is yes, then it's a valid pattern. The hammer, the shooting star, why they work, there's a philosophical argument behind it, there's a behavioral argument behind it. all you have to recognize is that that's an element that you have to get to grips with and decide which of those patterns you like, you feel more comfortable with. You know, I can't say to you some patterns are they more successful than other patterns. On some occasions they are, on other occasions they're not. Again, volume really will determine that. And the fifth element is the support and resistance. Now we look at price-based support and resistance, and we look at volume-based support and resistance. And the easiest way is to actually see that on the chart. So we make a synthesis of all these elements, and as I said, the best way to see it is actually on the charts. Now on top of that, you can put your technical indicators. You can have standard ones. We have our own. I know we have some of our quantum users here. We've got some of our students with us today, so you will know the indicators that I'm referring to. You will see them on our charts, and they are designed to, they're supporting the methodology. You start with the methodology. They work in synergy. Let's use all the S words today. It's they complement each other. That's really the best word that I can say. And on top of that, we have time, and we have the time chart that we're looking at, but we also use multiple time frames, which are absolutely key, particularly when it comes to the support and resistance zones, levels, because sometimes you can be on, you can be on one chart and suddenly the price reverses and you think, well, why on earth did that happen? Everything looks, a great setup and what have you. And it's usually because when you go to a slower time frame, you are in a confluence. It's it's reached a very key level, and slower time frames, key support and resistance on slower time frames really do trump, if you like. Right. These are the specialist forex indicators that we've developed. There's a currency strength indicator, which is really a flow indicator. It tells us what is the market buying at the moment. Are they buying pound? Are they selling pound? Are they buying dollar? Are they selling dollar? And you look at the relative strength, if you like, of the buying and selling, which is which is indicated by the steepness of the lines, and also is it overbought, is it oversold. Again, much better to see it actually in action. This is the matrix. This is where we take that data and we pair it up, and it actually matches the strongest pair, the weakest pair, the pairs that aren't doing anything. And you can use it both to highlight potential entries and exits, and also to help you stay in a trade. The array is much more for trend strength. And David will, he uses this a lot, so I will leave him to explain that in a bit more detail. And then we've got the currency heat map, which takes all the pairs and looks at their relative performance and strength across multiple time frames. Really, really important, multiple time frames. And finally, those of you who don't know already, all the what we've put together is a program, a training program for forex, where we cover all the elements that you need to know that we believe to make you a successful forex trader. And we're absolutely delighted that the students that we have are, for those ones that we know of, we're thrilled for them when they come back to us and tell us how well they are doing. Right, let me just take that down and let me pull up my MT4. I've got MT4. I've just got MT4 today. So David has the other platforms. He's got Tradestation, TradingView. You've got everything today, haven't you? And NinjaTrader. I'm just going to go to the CSI and the dollar index and the matrix. This is on the hourly chart. The hourly chart is I've said it before and I will say it again, it's an absolutely fantastic chart just to give us an idea of where what the currencies are doing, where they've been in the previous session, and more importantly, what are they doing at the moment. Most traders, the vast majority of forex traders, trade on the faster time frames for all sorts of reasons, and there's absolutely nothing wrong with that. But the hourly just gives us some context, and what we can see this morning is, because I've actually highlighted two particular pairs, and they're both euro pairs, and we can see the euro has actually been selling off quite strongly. The Swiss has been selling off quite strongly, and we have a buy of the dollar yen, of the yen, and we also have, we can see here over on the Dixie, we've got the US dollar. This is the performance of the US dollar, and the US dollar is quite interesting at the moment because it's actually in a range, as we can see here. It goes down, then it goes back up, it goes down, it goes back up, and it kind of reflecting what the general mood of the market is at the moment. We're going to talk a bit more about the general market in this afternoon session because we're going to look at stocks and indices and commodities. But market sentiment and market mood is something, as forex traders, you have to really have a handle on, because it will impact what is happening in the forex market. You have, those of you who are on the program will know, we have what are called risk currencies and safe haven currencies. So when market mood is not so good, you will have selling of what are the risk currencies, and the risk currencies are the Aussie dollar, the New Zealand, and the Canadian. And what are the safe havens? The safe havens are the Swiss franc, the dollar, which can actually act as both, and also the yen, which can act as both as a risk of currency. Now, if you look at what is happening on the CSI at the moment, you say, well, okay, well, you know, the Aussie's kind of selling off, but there's buying of the New Zealand and there's buying of the Canadian, which kind of tells you, well, market maybe is feeling a little bit, you know, not quite so fragile. What this actually tells us is the market really doesn't know what it wants at the moment. If we go over to investing.com, we can see here very, very quickly what's been happening. Well, this is the futures for the Dow. That's down 18. What's the let's have a look what the Nasdaq is up to. The Nasdaq, that's down as well. Let's look at the Russell. The Russell is one that I've been looking at quite closely. This is the Speculators Index. This is the Russell 2000. This is where investors like to try and find the next Amazon, the next Apple. So it's quite a lively index. The stocks that are in here, there's a lot of tech stocks, there's a lot of pharma stocks that move around quite quickly. What's interesting about the Russell is when you look at what the Russell has actually been doing, it has this, looks like a huge kind of possible distribution. You can see here it's actually held up quite strongly. I've got nothing on here. I've just got a bare chart. We're just looking at price action. This is one of the elements that we need to get to grips with. And we've also got a pattern. We have a pattern here. We've had this huge, big run up, and now we're in this extended, it's basically a range. It's never been able to get beyond 2,355. And at the moment, as you can see, it goes up, it goes down, and it's in this sideways. Now, if this carries on much longer, at some point it's going to have to break. It's going to break, you know, down to the downside, or, you know, is the market just, you know, going to take off once again? The market doesn't really know at the moment. There are so many factors that tell us this market should not be going up, but, you know, you can't allow what people write, comments that you may read, to influence what you see on the charts, because markets can stay overextended, they can stay irrational for months and months and months. And one of the things we're going to look at this afternoon is I'm looking through my notes back from July, when David and I were saying these markets are looking fragile, these markets, but they take a long time to actually develop. And you know, this is, you may say, well, I'm only going to be on the 5-minute chart. You know, how is that going to impact me? It's going to impact you in the sense that when you have this undercurrent, most people accept, you know, given the data, given the metrics, the market, what we call the market internals, and what we call market breadth, those metrics are terrible. They are awful. They are all pointing to the markets going south. So it's kind of, we're like sitting on a bit of a volcano, you know, a volcano. We know this volcano is going to erupt, but we're not quite sure exactly when. And all we can do is look at the chart. So when you're trading on the faster time frames, you are going to get these shifts of sentiment, and the shifts of sentiment are going to happen perhaps faster than they would have done if the market is in a much more settled or benign mood. So for you on the faster time frames, if you are in this kind of market condition, maybe think about position sizes, don't stay in too long. If you've got a profit, you then take it. The analogy we always use is the weather and for sailing. You can set your little boat out. It looks like a lovely day out there, and suddenly you can be hit by a squall. You've got to be prepared. So as I said, this is just all part of the background, the landscape, if you like, against which you are trading. Right. Having looked at the hourly, what we like to see as well on the matrix is we like to see some nice big numbers at the values for the actual pairs, because that actually tells us there's been a half decent move. Now, when they're obviously at the bottom and at the top, what are we looking for? We are looking for a potential reversals. Looking at the hourly chart for the CSI, we can see actually the euro, it does have the potential to carry on lower. Reversals are quite interesting, because when you have these high values and you've got a strong line that you see here with the selling of the euro, you say, okay, is it going to carry on? It could, but you also have to bear in mind we're going to be looking at traders are going to be start thinking it's the American session coming up soon, and that could provide a reversal or a pullback, which could be tradable before the trend lower continues. With the euro this morning, it's been quite interesting, and this is on the fundamental side. Just going to Forex Factory. What happened this morning, we had what's called the trade balance come in for the euro. The euro's been selling off, and it actually came in much better. This is actually the euro is exporting more than it's importing. And obviously, if you've got a big export company or block, then that should be positive for the currency, because if people are buying your stuff, then they've got to buy your currency. So that helps to support the currency. We tend to forget sometimes in Forex, this is a practical market. It's for the exchange of goods. So flow, the strength of the value of the currency is also going to be impacted by export markets, as it were. We also have at 1 o'clock Christine Lagarde speaking. Now, what I always suggest is don't just rely on Forex Factory. I've actually got 3 different calendars. This is as I said, this is the Forex Factory, which is great, and it's great because when you click on it, it also gives you some little references to go and check out the fundamental data in a little bit more detail. We explain all this in the program, but if you're very new to fundamental data and you want to know a little bit more about it, they do have a lot of links to different sort of media. They also have a really nice fundamental data releases. You read it like a chart, and it tells you, you read it like the chart. The chart speaks for itself. Then we've got Lagarde, but the thing about Forex Factory that it's very selective in what it puts out as what it considers important releases for traders, and for the trade balance as well. They also calculate it in a slightly different way. This is what they call the seasonally adjusted. Now, the market will react to this, but it was interesting that this morning, if you go to trading economics, you see you have much more, many more releases. The important ones are in bold, and what we have here is, what did they also had the trade balance. But you say, well, that's a different number. Why is that a different number from Forex Factory? And the clue is dear old Forex Financial Juice. Thank you, Amine, for doing this for us, is they actually have both. One is seasonally adjusted and one is not seasonally adjusted. Don't worry too much about this kind of differentiation. The important thing is that when this came out, when I was looking at the Euro CAD and Euro New Zealand, because they came in better than expected, then it did, you know, it did provide a little sort of boost for the euro. So just something to be aware of. I know you might think, well, 3 calendars is a little bit excessive, but it's like wearing 3 wristwatches to make sure that you're never late when you're going somewhere. But as I said, you know, markets move and you'll get a move and you think, well, but that calendar didn't make it seem as though it was an important release. For example, Forex Factory don't give that a red flag, whereas Financial Juice give one a red flag and Trade Economics also gives it a red flag. Right, to get back to the charts themselves, I'm going to pass over to David, but what I'm going to do when you come back is we're going to have a look at what I mean by synthesis by looking at the Euro Canadian. The Euro, as we see, it's all come to a bit of a grinding halt, the Euro Canadian. We've had this nice move this morning. It actually goes back to yesterday, and when we look at the charts in the multiple time frames, we can spot the reasons why. We've got a candle pattern, we've got an all important support and resistance, we've got the daily chart giving us some information and how we look and put that together. And the other one is the Euro New Zealand. Those are the two at the bottom. I think the Euro New Zealand is not quite such a smooth lower because it's actually at some key levels. This blue candle here, that was actually the reaction to the trade balance, and this is what I mean. So you know, you can be in a really nice. This is the move lower on the Euro New Zealand. This is the reaction, not a huge reaction, but enough to that you can see it on the chart, and you know the market moves on with fundamental news. It's is it ever going to move a strong trend, if you like? It has to be fairly dramatic. Yes, it was an improvement to the trade balance, and yes, that was the reaction, but it looks like it's going to carry on lower. But as I said, I'll do the synthesis bit when you come back. I just want to pass over to Dave.
Hi everybody, good to be back. Hopefully you can see my screen. Oh, sorry, did I blast your eardrums? Sorry, I frightened Anna. Yeah, as Anna, if you've got any questions, please just drop them in the chat box and we will be happy to answer them on air. I'm just fiddling around with my microphone for a minute. There we go, that's better. Where to start? Let me just pull this over because this really just encapsulates where we are at the moment. This is all on 5 minute, 4 charts on 5 minute. This is the pound index. This is the yen index. The bottom left is the dollar index and bottom right is the euro index. So it's pretty clear what's going on. There is some more pound buying coming in. We've had some, not strongly, congestion for the last sort of couple of hours or so, starting to break higher. Yen is really not going anywhere, so not much going on in terms of the yen complex at the moment. This is the dollar. That's been rising slowly into congestion at the moment, but looks as though it's trying to break higher again. And this is the one that's really been moving. Obviously, the euro, it's been moving since 7 o'clock this morning and continues to do so. And I've actually got euro dollar up on NinjaTrader, which I'll pull up in a moment. Just while I'm on TradingView, just to avoid coming back over to it again. This is the latest indicator that we've added. I say indicator, I suppose it is an indicator. It's the latest development that we've done for TradingView. This is the radar panel, very much based around radar screen for Tradestation, and essentially gives you that that grasp of multiple markets, multiple time frames. You can have as many of these running as you wish. We've included pivots, volatility, trends, trend monitor, and also Camarilla. And you can also, up here, you can see you can also have the Camarilla levels. So basically what I've got here, this is just with pivots, volatility, and the trends. This one is with Camarilla. This is another one with trends, and this one is just with the tick volume on as well. The nice thing with the tick volume is not only does it give you the actual current volume count, but it also gives you the midpoint. So you get an immediate sense of where the volume is in relation to the midpoint. In other words, what is average in inverted commas, or what is the mean for volume on that particular pair and that particular time frame. So it just gives you a heads up to when you're seeing extreme volume coming in or ultra low volume coming in, so on and so forth. And you get all these signals coming up as you would expect on pivots, when it was. Same with volatility, it'll tell you how many bars ago it was. That's pivots, that's volatility. And then of course you've got the trend dots and the trend monitor here as well, just giving you all this information. So that's the one we developed for TradingView. And what I've got it set up here on the panel next door is basically this was the penultimate indicator, which was the currency strength indicator for cryptocurrencies. This is all based against Tether. The red line is Tether. All the other lines are a variety of cryptocurrencies from Bitcoin, Litecoin, Ethereum, etc., etc., etc. And I've got that running along here. Alongside, I've got, again, one of the radar panels with all those in here. Just gives you a straight through visual on what's going on in terms of 5 minute. I've got the 3 minute down here. Got the volatility triggers coming up here. When was the last volatility on that particular time frame? I've got Camarilla here telling me, possible opportunities, analyzing the chart, possible in reversal, etc., possible long, etc., etc., etc. That's all available. If you have the full package of TradingView, you should have all these now on your panel. If you haven't, just send a help desk email, helpdesk@quantumtrading.com, and the support guys there will help you out. But as I say, if you have the full package, you get all these indicators free of charge, and that applies to every other platform as well. So that's where we are on TradingView, which we're actually going to pause on for the time being. We're actually now working on NinjaTrader. Pretty much for the next few months, we're going to be working up Market Analyzer into pretty much the same thing. So you've got a really strong panel, a radar panel in Market Analyzer for stocks, for indices, for currencies, commodities, whatever it may be. And we've also got some new indicators which we're going to build on NinjaTrader also. And in addition to that, we're going to be building a stock trading program around the NinjaTrader platform in due course, probably not until the back end of next year. But that's where we're heading to in terms of NinjaTrader. This is on Eurodollar, and just wanted to pull up probably a couple of charts here, actually, the 10-minute and the daily charts as well. This is Eurodollar. Now, bear in mind, when I was looking at this earlier on, the volume point of control, this yellow line here, wasn't actually at this level. It was up at this level. And that's the reason there is this very strong area of both resistance, both support, depending on which way you look at it, but particularly strong support with this blue dashed line on the accumulation distribution level indicator. So we know there is a very strong level there. And basically this was coming through at 7 o'clock, Europe getting underway, obviously volumes picking up as we come into London, etc., etc. The reason I'm highlighting this is because there was actually a post in the VPA traders chat room the other day, and the person who posted wasn't bemoaning the fact that they missed out on getting into trades early. Well, I suppose in a sense they were. They were trying to ask the question, well, what do I have to do in order to get into a strong position early? And there's really only one response I have to that, and is you have to be patient. We all look back at past positions and think, oh gosh, look at that trend. I missed all that. Why did I miss all that? You have to be patient, and you have to take a position early in the market. And I've said this many, many, many times before. There is a price to pay, and the price to pay is you have to set a wider stop loss to allow for all this buffering that goes on up there. I mean, this is an extended period. This is, 9:30 last night. This is overnight Asia time. Nothing happened. It's just in congestion. You've got to wait. Now, if you're in the Northern Hemisphere, you're obviously sleeping, but in the southern hemisphere, it's not so much fun. But you have to be patient, and you've got to set wider stop losses. And if you're prepared to do those two crucial things, then these sorts of trades will come. And that's really the only way I can describe it. As I say, the VPOT was up here. We had a really strong level here. We broke through that level. Now, even in breaking through that level, looking at it, you might decide, well, actually, you know, I'm not comfortable with taking that trade because I'm not certain it's going to go to the downside. Then we get the break lower on with a volatility trigger, lots of volume coming in. So we know it's a genuine move. You know, the big players are in there, excellent. Then we see this really strong candle here. We get the, you know, the effort to rally, even more volume under that one. You know, that's heavy selling going into that particular candle. It's the market forcing volume into a market that is not receptive to buying, but nevertheless they are forcing it out there into the market, but the buyers are not there yet. They come in on the next one, and the guys who come in here are the ones who are really buying. They're buy dips. There are any number of traders out there who will buy dips. If the market you know, sells off sharply or rallies strongly, you know, they will sell to a strong rally, they will buy on a strong move lower. That's part and parcel. Yes, there is buying there again, but it doesn't go anywhere. And then we get another signal here. You know, these candles, I've mentioned them many, many times before. When you're in a downtrend, look at these candles. The effort to rally, wick to the upper body, and the big fat body below. Same here, not so much of a big body. The way I describe these, I think the analogy I've used in the past is a water-filled balloon. I'm sure you've all done it. You fill a balloon with water and gradually extends and extends and extends, and the weight of the water drags that balloon down, and eventually, obviously, it bursts, all the water falls out. And that's what happens with these candles. And you're seeing it there. You've got another one here, and you've got another one here. And of course, backs up across that, you know, the trend monitor is bright red throughout. And the other reason, of course, it moved through here very rapidly is because we had a low volume node. So once you get down to these sorts of levels, you know the market should move through here rapidly because there's very little in the way of volume to actually support at that point. So it's gone crashing straight through there, more volume building here into congestion. Then we go through here pretty rapidly because we've got low volume. Now we're building an area around the VPOC. Now what we want to see is obviously a move away from here. If it's going to be confirmed, you know, we want to see rising volume in the downtrend as it moves deeper still. Very quickly, just to move over onto, I just wanted to show you that. Oh, sorry, very quickly on the daily. You know, even if you're an intraday trader, the daily gives you clues, it gives you information. You know, look at this little rally here. We've got falling volume, rising market, and then we get a little weak signal here. You know, more volume going in. It's really not, it doesn't look strong. You know, it's, if you were looking at just as a broad brush as to what you might be doing on an intraday basis, that's not to say there weren't long positions to take, obviously, at some point in all this price action, but just broad brush, you're looking at thinking, you know, what is the broad picture for this at the moment? You know, is it looking strong? Is it looking weak? Is it going to, you know, break to the downside, break to the upside, whatever it may be? Very quickly, let me just, and then I'll pass back to Anna. Let me hop over onto, just want to show you on the currency arrays. Where are we? Anna mentioned this. Very important. I just want to highlight this because we get asked this question a lot. I use these a lot, but bear in mind, the currency array is a slower term time frame. Just click that off. That's on euro. You can see what the sentiment is. It's pretty universal. There's not much differentiation, really only on euro Swiss. Which is no great surprise. All the others are pointing very sharply downwards. That's the overall sentiment right now towards the euro. But do remember, if I go onto the indicator itself, look at the look back period. The look back period on the currency array is 80, okay? So it's taking a much longer perspective on what is going on. So do not think that this is the same as the currency matrix. If I pull up the currency matrix, there we go. The currency matrix is much more of a scalper's tool. And the reason for that is very simple, because if I click on the indicators again, look at the look back, it's 7. There's a huge difference between the currency matrix and the currency array. And you can think of it in exactly the same way as the trends indicator and the trend monitor indicator work. The trends indicator with the little dots works very, very close to the price action, and therefore will reverse and move into congestion very tightly to the price. Whereas the trend monitor it steps back, it looks at it over a longer period of time, and therefore gives a more considered view of changes in trend or moves into congestion or moves out of congestion. And that's why the two indicators are so powerful together, both the trend indicator and the trend monitor. And the same is also true for the currency matrix and the currency array. So please bear that in mind. The currency matrix is fabulous if you're an out-and-out scalping trader. Terrific. Use multiples of these, have the 1, 2, 3, 4. They will move very, very rapidly, but do not expect the currency matrix to align with the currency array for that simple reason. I'm going to stop there and pass back to Anna.
Hopefully you can see my screen. And what do I have here? I have the Euro New Zealand, but I actually did my little exercise for you on the Euro CAD. So I just bring that back up and look at my notes. You turned yourself off. Oh, I can hear you yourself over there. Never mind. Right. And it looks like there is still selling of as we saw with David. I'll just bring up this is the hourly chart that I use. Where are we? Yeah, the EuroCAD is actually there's still more selling coming into that. It's quite interesting also with when you see strong selling of a particular currency, and you because that's where we start with where are the flows going into? Are they going into the euro or the pound? The pound was doing absolutely nothing this morning, and we know it wasn't doing anything because the line was just simply moving sideways, going nowhere. Now it's moving now, but you can see that. So again, it's patience, and this is really one of the beauties of the CSI. It gives us so much information at a glance, so it saves you having to look at lots and lots of charts simultaneously. So clearly there's some nice strong buying of the pound, but look at the dollar. The dollar is also going up. When these lines move together, it's telling us that there's in terms of a trend, you want divergence. You want one going strongly in one direction and one going strongly in another. Doesn't mean to say that when they're moving in the same direction, that they're necessarily standing still. You'll tend to find they'll be in a more of a range, and it's an asymmetric move, if you like. As traders, what we want is we want a nice trend. We want a nice move, and we want to get in that move either on a reversal or some kind of correction, some kind of pullback. And this is where BPA will tell you whether that pullback is genuine or not. As David has shown you, if you're in a downtrend and you see some up candles, what's the volume underneath it? Because it ain't going to move if it hasn't got some support, some buying under there. And you think, no, that's not. And down it continues. Right, so this is what the CSI is telling us. A couple of other things about it. When you see some strong buying or selling in one particular currency, you then have to, that doesn't necessarily mean it's across all the pairs, and that will be dictated in part by sometimes by the session. So what will happen is you'll see a strong move, say we've got EuroCAD at the moment, picking up some speed again, and we'll see that when we look at the profile for the pair. But we're coming up to the US session when the Canadian comes into its own, because it's the currency of that particular, it's the prime currency for that particular zone. And so at times where you see strong moves in one pair in one session, you still carry on selling a particular currency, but it'll rotate into another, and you have to be aware of what can this change in sentiment, in focus on the pairs in the different time zones if you are on the faster time frames. Right, I'm going to have to refer to my notes because, as I said, I said to you about synthesis. This is what we do as traders. It's the combination of components. This is what synthesis means, to form a connected whole. Now, I'm just looking at the connected whole based on the technical analysis of the charts, but the combination of components for trading, it's not just the technical picture, it's also what's going on from the fundamental perspective and what's also going on in the broader landscape. But let's start with the charts, because that's where we all start. The first thing you have to do is you have to set up some kind of profile. This is, as I said, MT4 or workspace, because you need multiple time frames. And the multiple time frames I have here are the daily chart, I have the hourly, I have the 15, 5, and I have a Renko chart, which is not a time-based chart at all. It's simply the chart is only one of these bricks, one of these candles only completes when a certain number of pips goes through the market, and this is actually set to 3 pips. So this is, you really can't do synthesis on one time frame or one chart. If 5 is too many, you really, start with 2, maybe 3, but certainly 5, I think, is the optimum. And with MT4, you have, you don't have as many a choice of time frames, but in a way it's better, because sometimes when you have too much choice, as you do with NinjaTrader and some of the and TradingView and some of the other platforms, and you're perhaps starting, it can be a little bit overwhelming. I always say start with MT4, and even if you go on to other platforms, MT4 is the brokers that offer it, you may use it just for execution, if you like, and your analysis on another platform. Right, so what do we have here? Having a quick look, just a quick glance at the daily chart. Well, this is obviously today's. We can see it's been selling off, but it was already selling off from yesterday. So it's really a continuation of the move that started yesterday. But really, the key to this move here from yesterday is looking at a pattern, and we're looking at this shooting star a pattern that we have here. Well, shooting star, it's obviously a wick to the top of the candle, so we know there's weakness coming in. Where did it go to? Well, it actually hit what we call the R1 on the Camarilla levels indicator. The R1 is important, but it's not as important as the third and the fourth levels. The third and fourth levels are really, if you're going to give them some sort of importance, are much more significant. But we have a pattern. So of our 5 elements, if you like, in VPA, you don't have to. It's up to you to decide where you're going to start. A pattern, a candle is always, it's a good place to start, quite frankly, because shooting stars, hammers, they're the most straightforward, and most of the time they work very, very well. And it's it's something to perhaps as I said, to start with, but don't expect them. If you see us to shooting star or hammer, that's it, one signal, off I go. It doesn't always work like this, but on this occasion it did. The next candle we see here, we've actually got the volatility a trigger, which means the price action in this candle was outside of the average true range. But what volatility does, it means there's momentum that's come into this market, and on certainly if you get this on the hourly chart, because it's a slower time frame chart, it's something to be aware of. Now, what happens when the volatility and momentum comes into the market? You get a very fast moving market. We do have quite a lot of volume underneath that candle. What happens when the volatility is triggered? One of two things. Well, the first thing that always happens, I would say 100% of the time, the price will retrace to within the spread of the candle. And then what happens? It either congests or tends to reverse. Now what's happened here, you probably can't see, but there is a wick to the top of that candle. It did actually reverse into the candle, and the expectation is a reversal or a congestion. But what happened is more momentum came into the market, and down it went again. And where did it stop? It stopped at the S3. So when you see this, that was the trigger. You had the volatility. The next question is, well, okay, I've got this move underway. Don't forget, this is the hourly chart, and we're going to see how this is reflected on the faster time frames. Because you have these levels, these key levels, you know at some, this is obviously going to stop, but the S3 is almost always going to provide a cushion, a pause point, and we only have to look back to see the S3. This level is this week's level. The Camarilla levels are calculated in such a way that what you see on the hourly and the daily charts are in play for the rest of the week. These are the ones. This wouldn't have been the S3 last week, but it's obviously an important support level, which also explains why it stopped. So you have two reasons why you can the expectation is that is where it is likely to be going following that volatile move and the shooting star. Hold on a second. Apologies about that. Okay, so that's on the hourly chart. We have two big down, lots of momentum, and it went down to the S3. Now let's see how that plays out. I'm actually going to play it out on the Renko chart, and I've actually put it right up here on the Renko, and I've actually put this is a line that I've simply put in the Camarilla values that you see on the Renko and on the time frames up to but not including the hourly chart are refreshed every day. So that's why you don't see them at the same place as that you do on the hourly chart. But this is the point that you would have seen on the hourly chart. You can see I'll try and bring it down a little bit lower. You can see here it's been choppy. The moves have been choppy on this particular pair. It did actually manage to sort of, go higher. With trends, everyone expects a trend to be very smooth, but there are different kinds of trends. There's trends with volatility, there are trends with no volatility. And again, this is something we go into in great detail in the Forex program. And you've got to be able to see that you can see visually the difference. If you in a choppy trend higher, in a volatile trend higher, you're going to be stopped out much more much more often. We know it's choppy because the trend monitor keeps dipping in and out of the different colors. Now you can smooth that on the Renko simply by increasing the value of the brick size. If that was a 1 pip or 1.5 or a 2, you would get more. If you go to a 6 or a 7, then you're going to get a smoother trend. I find 3 works quite well. The indicator for our Renko, you have what's called the ATR version, which allows you, which basically the system calculates it for you. So this is the point that corresponds with that hourly chart. So you can actually use the Renko with quite a slow time frame. And then we have the move lower. We still have these pullbacks here. Primarily, you also have to look at the time of the pullbacks, and in general, they are around a time when most traders aren't trading. The liquidity is low. You're going to get spikes, but we did get a really nice move lower. We've got a couple of pullbacks. What the Renko is really good at, it helps you with your initial entries, but it's absolutely brilliant at helping to keep you in. I always say with the Renko, when you want to get out, look more to the time frame, and the time frame that I match with the Renko is actually the 5-minute chart. And when you begin to see the patterns with the levels, with the type of price action you've got, with the type of trend that you've got, are you looking at a reversal? That's when you can consider to come out. And in fact, the coming out, it would have been, there's nothing wrong, you know, it actually hit, it was at about 10 o'clock this morning. This was the move lower from the London Open. We had a bit of congestion, then we had the move lower. It actually hit the S3. You could have easily have possibly, you know, come out there. As I said, the S3 and the R3, they are these levels that you can use for stops. You can also use them as potential targets. But what's interesting about this move lower is we then had a bullish engulfing candle on the trend lower. It's engulfing because it completely engulfs the previous candle. You have to remember, this is the London Open. This is a time of a lot of liquidity. But if you look at the volume underneath that engulfing candle and the size of that candle, it's really not fantastic. So that is kind of suspicious of itself. It may be from a price action perspective an engulfing candle, but is this actually going to go very far? And then what you do is you look over here to this candle and you see what happened the last time there was a candle of similar size, and you look at the volume that was under there, and again, it's not that fantastic. So that is another way you think, is this going to, and it, you know, it carried on, but the volume didn't increase. If you are going to carry on higher, this has got to be rising. You've got to have more selling. Plus, it does hit a level. It hits a Camarilla level, but it also hits a volume level. These lines that you see here are derived from the volume point of control. As I said, we use volume-based support and resistance. You have to know how you may like to measure these. You might use a Fibonacci, you might use a Gann fan. It really doesn't matter, but you've got to be comfortable and understand and how you display key levels of support and resistance on your chart. As I said, there is no one size fits all. That's what I'm trying to say. You as a trader, you have to decide what works for you. We have found with volume, being volume traders, we use volume to as part of the analysis. We've developed this indicator to tell us these points on the chart, not just price-based, because when you get a combination of price-based, you've got a price-based one there, you've got a price-based one based on the Camarilla, and you've got a volume one, and you don't have volume going up, well, that kind of tells you this move is going to carry on lower, and it does. But again, the volume kind of stays the same, so you think, okay, well, there's a little bit more in there. And I actually thought at this point, possibly, you know, there was a potential reversal setting up. Then we had the trade balance, which certainly gave it a little kick higher. But on the hourly chart for the euro was about here. Now, clearly, you know, it can reverse at any point on its journey on the way down, but it looked as though there was enough, you know, it did still want to go lower. Now we look as though possibly there is a reversal in the euro, but I'm not sure whether it's against the Canadian, because the Canadian still has a little way to go, and we'll have to see what happens when the Canadian traders actually, you know, come on board in about a sort of an hour or so. So that's what the 5-minute chart was seeing. With the pullbacks, you do get them. You will see them on the Renko. Let's take this from here this morning. This is 8 o'clock. Take 2 hours off here. So that's really, this is the move that we're really seeing from this morning from the London Open. It actually came off the R2. This is the S3 where we've had that congestion, but notice the pullback. This stays red. The trend dots will change, but they didn't change to blue. They actually only went to a grey, which is neither here nor there. And The question is, well, where is this going to? As I said, the third and the fourth is the most important. That is where this is the logical stopping point for this particular move. And on the 5-minute chart, where are we here? We've got the S4 and we've got that's been taken out now. That's volume support. The support and resistance levels, when the price is next to it, they are dynamic. So, you know, they're not, if the conditions change, they will change as well. And what I'd also like to say is, going back to the hourly chart, when we were looking at this really all started from this move. What happens with the S3 when it breaks lower, you will often find it will go back and retest, and if that retest holds, that's also another potential entry for you to consider. Now, the volume down here is clearly way below what you would expect, but you have to look at the time. This is 3 o'clock in the morning. This is Asia. The Euro Canadian really doesn't move an awful lot in this particular time zone. I'm not saying it doesn't, but it's not where you're going to get much more in the Aussie, the New Zealand, and the yen. But what I also want to say about this these components, these elements that we saw on the hourly chart, is look at what the CSI is doing. The CSI is at one of its really strong points is where you get a cross of the two lines. That's also, the trend is probably underway already. There certainly was some buying there was stronger buying of the Canadian, but where you get the cross, it's always useful to look at, because you may have missed some of the move, but it is a possibility of carrying on higher. And what the lines also reflect is obviously the pullbacks. When they move in parallel, it means, as I explained earlier, the price is going in the same direction. But what's interesting here, we have the S4 here. We've got the Canadian kind of wants to move higher, and if there's strong buying of the Canadian, and you may at this point think, do you know what, the euro's turning up here, we're coming into North America, maybe there's a better Canadian pair where that buying is expressed more strongly because you want a strong sell of the counterparty currency. And if it does get beyond the S4, well, we've got the S5 down here. But to go back to the hour again, I actually thought this was the trade balance here. It actually got to the S4, and I thought, I think that's where be a good point to, it is actually going to reverse. It went through. Markets always, support and resistance are great. They're great points on the chart, but they're not rods of steel. You've got to be a little bit flexible with them. And what's interesting about this down candle is the volume is not great. It's not fantastic. So that possibly tells me that, that selling may be coming to a point where a reversal could be feasible. So that's where it is. You have to look at all these components, look at the price. Are you in a trend? What are you, are you in a congestion? That's your price action. What is the volume telling you? What are the, do you have, what kind of candles have you got? Have you got momentum? Have you got volatility? What are the different time frames telling you? And where are you in terms of support and resistance? I know it seems a lot, a lot to take in one go, but I can assure you, you will be able to put all these components together. This is just a technical picture. Then you have the fundamental and the sentiment picture. And just to pick up on what's happening at 1 o'clock, I have a feeling Christine Lagarde is speaking. This is why I need 3 calendars. I have 3 watches. There we are. Where is she? 1 o'clock. 1 o'clock. Yes, she's speaking, and I can give them, the garbled messages that she's been giving lately. I think the market is going to take note of that. Now, what that also tells us is that given that she is going to be speaking at 1, what you might find that the euro will just simply, retreat into its shell and wait to see what she's got to say, because she's going to talk about the euro. So, it's going to be an important event, as it were. Right, I think that's all I've got to say. I'm going to pass over to David. As I said, we are going to be back this afternoon, where we are going to have a look at, we'll be doing primarily doing stocks, but VPA, it's the same principles. It doesn't really matter what you're looking at in terms of the price, the price action, the volume, the support and resistance. Obviously, the context is going to be different. Whether you're looking at an index, you've got to look at other fundamentals and market sentiment, etc. But so, as I said, for chart reading purposes, you can choose whatever chart you want to put all these elements together. In terms of news, as I said, Lagarde, and then we've got the all-important retail sales later on.
Hi everybody, welcome back. And I've changed platforms again. I'm actually on Tradestation now, and the reason I'm on Tradestation is really just to show you, this is Tradestation 9.5. There are two versions we do of Tradestation. One of them is this version, which is basically driven by an interactive broker's account. So if you have an IB account, you can actually hook it onto the Tradestation version, and you can run it in that way. So basically, Interactive Brokers is providing the data feed to drive the charts. The other version is Tradestation Securities, which is on version 10 and above, and in that version we use the Tradestation data feed. It's immensely powerful because obviously with Interactive Brokers you can trade straight through into IB with whatever markets you choose. I've just got the currency futures up here, and the reason I've pulled it up is because when Anna started, these are all the major currency futures. I've got the 6A, Aussie dollar, 6B, pound dollar, 6C, which is CAD dollar, 6E, which is euro dollar, 6N, which is New Zealand dollar, and I've got the Swiss dollar down on the bottom right here because I couldn't fit it in over here. But basically, this is just a panel which shows you what is going on in terms of the dollar. So if it's all blue, then it's dollar selling. If it's all red, then it's dollar buying. Sorry? Blue. No, blue is dollar selling. Yeah, because the currencies are going up. This is Aussie dollar, so Aussie dollar is going up over here. Anna's confusing me. There we go. Anna's confusing herself. That's the Aussie dollar. That's on 1 minute, and you can see here we're starting to get some dollar selling coming into the market. Now, obviously, bear in mind this is 12 o'clock. When we get to 1 o'clock, we've got session crossover, and all that entails. Obviously, trend monitor transition. We've got the trend dots here. Remember what I said earlier on about the trend dots and the trend monitor. The trend dots here will work very close to the price action in exactly the same way as the currency matrix. The trend monitor down here will step back, as does the currency array. So that's the Aussie dollar. But the reason I wanted to pull it up was because this panel really gives you a visual perspective on what is going on across the matrix, across the dollar matrix, for these much faster time frames. I've got 1 minute through 5 minute on all of them, but bear in mind these are obviously currency futures, so pretty much the same thing will be going on in terms of the spot market. You can also get a sense, I've got the volatility on here as well, you get an immediate sense of the lack of intraday volatility down here, because the only place that we've seen any volatility in recent times is on the 1 minute for the cable, 6p. So if I just click on that, there it is. 5 bars ago, whatever it was, 4 bars ago, that was your volatility trigger, came in, may or may not be significant for you, maybe an opportunity, may not be an opportunity, but nevertheless, you need to know when these are coming in across the time frames. And of course, I've got the CSI in the middle. It's just a fantastic way to get all the information. I've also got an NQ chart up here alongside. And again, I've got a similar sort of panel set up here, so it'll give you a heads up as to, on the radar screen, what is going on in your faster time frames. Is this sentiment that we're starting to see on 1, 2, 3, 4, 5, or up to 4 at any rate, is it starting to move through the market quite strongly? Is it going to go to 5? Is it going to go to 10? Are these going to start transitioning from red into a darker red, maybe into darker blue and out the other side, and so on and so forth. And that's the power of it, because on the 5 minute at the moment here, you can see trend monitor is dark red, so we're in dark red. So we've got a transitional move coming on. We've come out of bright red with this, bearish move lower into a darker red. Is this blue trend, which we're already seeing significant on trends anyway, which is what we expect to see, because we expect to see it change here first rather than here. Is this going to be significant and migrate through across into the slightly slower timeframes as it moves up from the faster? Because that's the way trends work. They will work from the fastest chart you have, in this case a 1 minute. The pebble and the stone analogy is one I've used multiple times. You drop a pebble in the pond and it ripples out from there, from where it lands. Exactly the same here. The changes in trends or development of trends will start in your fastest chart and gradually migrate up through into your slower timeframes. And then it's all down to multiple timeframes, VPA, all the indicators, everything Anna's talked about and everything else. Below here, I've got the time and sales window coming through. This is live from IB again. This is telling me the contract sizes that are going through, the times they're going through, but more importantly, what they're going at. They're going at the ask, are they coming through at the bid, and also the numbers here. And it's pretty sluggish right now. You can see how sluggish it is. Once the market gets underway, this really starts to fly and you get some massive numbers coming through. And in that way, you can interpret, how the price action has reacted to that volume of time and sales. A big number comes through. How's the price reacted? Has it reacted badly? Has it reacted strongly? Etc., etc. So it's just another tool in the toolbox of volume, using volume in a different way. And obviously you need the data feeds to do it. We have it with IB, which is why this is a powerful setup, using it with Tradestation this way. Right, I'm going to wrap up there because it's 12:15 already. We've run 15 minutes over time. Sorry about that. Very quickly, where you can find all the indicators, they are at quantumtrading.com, MT4, NinjaTrader 78, TradingView, and Tradestation. Always remember with TradingView, it is immensely powerful because it is a browser-based platform. So you don't need to worry about running on Windows. You can run it on pretty much any device, an iOS device, whatever it is you choose. You can run our indicators on TradingView. So it's very powerful in that way. It's a great platform, I have to say. There's lots of uniques with it. It really is pretty cool. As I say, we are now focusing on NinjaTrader for the next few months. That's where we'll be. We'll put stuff up on the labs.quantumtrading.com, which is where we'll keep you up to date with what's going on in terms of NinjaTrader. But the first thing we're developing there is to very much get the indicators ported across into Market Analyzer so you can use them in Market Analyzer. If you have the full package of any of these platforms, you automatically get any indicators we develop in the future free of charge. We have worked that way from day one. We will work that way till, well, whenever, till hell freezes over. It's just the way we work. If you invest in us with the full package, then you get the benefit of getting all future indicators we develop free of charge. It's just our way of saying thank you. And remember also, if you buy one or you've bought a bundle in the past, whatever it may be, if you want to upgrade, we always give you a full credit. So you don't have to start from scratch. If you've bought, I don't know, a CSI or a currency dashboard or something, you decide you want to upgrade to full package, you only pay the difference. We give you a full credit for whatever it is you spent with us. Simple as that. This is where you'll find the Forex Education Program at quantumtradingeducation.com. Hugely successful. It's been massively well received over the years since we've launched it. It is called the Complete Forex Trading Program because that's just what it is. It gives you all the tools, information, knowledge, because you get the full suite of indicators with this as well. It gives you all the information that you need to trade this market with confidence. These are all the modules: psychology, fundamental, relational, technical, and mechanics of trading. Huge resources below here: VPA chart examples, how to use the indicators, pulling it all together, topic webinars. There's something like 450 lessons in there. There's 250 to 300 hours of video. There's 13 PDF downloads alongside it as well. And in addition to that, we also have the VPA chat room down here, which is hosted by Anna and myself. And a lot of our experienced traders are wonderful in there. They go and help students, answer questions. It's just a very friendly environment and a great place to be. We bolted on the funded Forex program last year, back end of last year, I think it was. Basically to give our students the opportunity to put that knowledge to the test. very simply trading our money, not trading your money, trading our money. So there's no risk. There's a one-off entrance fee. And basically you join that, you start at one of three levels down here. You can start with a 5,000 account, a 10,000 account, or a 15,000. This is real money. This is not demo money. This is real money. You start with real money account, 5, 10, or 15. These are the entry ticket cost, if you like. It's a one-off cost. You don't pay it again. That's it. And then once you start at that level, it's an evaluation level. You're only trading spot forex there, the 28 pairs. Once you go through that, the target that we set, it is a percentage target of your entry capital amount. Once you've hit that target, we rebate a percentage back to you, and then you start to work your way up to portfolio manager level here. We add into that mix gold and the indices as well, so you have a broader range of markets to trade. And once you go up to the next level, we multiply your capital. So if you start at a $15,000 account, we multiply that by 4. So you get $60,000 allocated to you to trade. And thereafter, it's a factor of 2. So you go 61, 22, 44, 80, all the way up to 960, 1 million, and 2 million and beyond. You will earn rebates all the time. It's 50% on 50% of profit is kicked back to you on the portfolio managers level, and once you get up to the $1 million and $2 million accounts, it's 60%, and that's rebated monthly, or you can leave it in your account if you wish. It's entirely up to you. You just let us know, and we pull that back for you according to what it is you actually want. Of course, there are risk money management rules. It's what you would expect, but there is no risk to you because you're not trading your money. Finally, on Anna's site, annacooling.com, this is where you'll find all the books, links to all the indicators, all the various bits and pieces there, and all the analysis that Anna does there down the left-hand side, and the Facebook pages here as well. I know some of you follow on Facebook as well also. So there's a lot of stuff goes through there on Forex, and a lot of the indices and commodities types of stuff goes through on the site itself. That's it. Thank you very much indeed for coming along today. I hope you've enjoyed it. We will be back at 3 o'clock UK time, which is in about 2 3/4 hours. So we will see you then. Enjoy the rest of the trading day. Remember that Lagarde is coming up at 1 o'clock, so expect the euro to move sideways for a bit and then hopefully explode into price action. Everything else is moving kind of sideways at the moment, but I'm sure once we get to 1 o'clock, US markets get underway, and things will liven up a little bit then. So thanks for coming along today. Hope you've enjoyed it. Hope you've learned something perhaps you didn't know before. See you soon, and bye for now.